Welcome to 2025. The world of money feels shaky. Words like recession and stagflation are everywhere. A recession means the economy shrinks, jobs are lost, and businesses struggle. Stagflation is when prices rise, but growth stalls, making your money lose value. Experts are watching closely. Goldman Sachs sees a 30% recession risk, Oxford Economics 35%, and JP Morgan warns of stagflation with slow growth and high inflation. The Federal Reserve is keeping interest rates high to fight inflation, making borrowing more expensive and markets more volatile. High rates mean bonds pay more, but stocks can swing wildly. Chicago Fed President Goolsbee says stagflation isn't likely, but surprises can happen. The Fed isn't cutting rates soon, so expect borrowing costs to stay up. For investors, it's a complicated picture. Caution is key. Don't panic, but be smart and prepared. Understanding these risks is the first step to protecting your money. The economic weather is uncertain, but you can navigate it. Let's see how. In stormy times, diversification is your financial life raft. Don't put all your eggs in one basket. Spread your money across stocks, bonds, gold, commodities, and even a little digital currency. Bonds and tips offer stability and protect against inflation. Gold is a classic safe haven. Experts like Ray Dalio suggest 10 to 15% in gold. Commodities like oil and agriculture can rise with inflation. Fidelity recommends a mix for broader protection. Bitcoin and digital assets are risky but can add growth potential. A small 1 to 3% allocation is enough for most. BlackRock notes, gold brings stability, Bitcoin brings growth. Diversification smooths out the ride and shields you from big losses. Build a portfolio that can weather any storm. Let's make it practical. Here's how to put diversification into action for 2025. First, rebalance. Trim stock gains and move some money into bonds and tips to lock in profits and reduce risk. Add inflation hedges. Invest in gold and commodities through ETFs for easy access. Allocate 10 to 15% to these assets for protection against rising prices. Consider a small stake in digital assets. 1 to 5% in Bitcoin via regulated funds if you're comfortable with risk. Hold more cash than usual. Aim for 6 to 12 months of expenses in a high-yield savings account. Cash protects you in emergencies and lets you invest quickly if opportunities arise. These steps build a resilient, flexible portfolio. Take action now to stay ahead of uncertainty. Next, let's find the right mix for you. Every investor is different. Your age, goals, and risk tolerance matter. Here are 3 sample portfolios for 2025. Conservative, 40% stocks, 30% bonds, tips, 15% gold commodities, 5% Bitcoin, 10% cash. Focus on stability and capital protection. Balanced, 50% stocks, 20% bonds, tips, 15% gold, 5% commodities, 3% Bitcoin, 7% cash. Mixes growth and defense. Aggressive, 60% stocks, 10% bonds, tips, 10% gold, commodities, 5% Bitcoin, 5% cash, 10% alternatives. Aims for higher returns with more risk. Use these as a starting point, but tailor your plan to your needs. The best portfolio is one you can stick with, even when markets get rough. Adapt your strategy as life changes. Stay informed, stay flexible. Choose the path that lets you sleep at night and reach your goals. You're ready to face whatever 2025 brings.